What's up, my friends? Happy hump day. It's the first. Make your payments, hopefully on your mortgage and not to rent. We got some good news for you today. Oh, do we? After I called the bottom in the bond market 37 times, finally got it. This is it. It's the one. And I'm sure of it now. Not just because of the break of structure I'm going to show you in a second, not because this big, beautiful green candle right here, 136 basis points today. Oh yeah, we're going to have some sound effects for that. In fact, we got it right here. 136 basis points. Look at this. Oh, gotta turn the loop off. Look at that green candle. What did I tell you? This day would come. The bond short trade is over. Rates will go down fast. I said that very recently. It's not what I was hoping for. It's just the way it's going to work. They're going to Wall Street's going to have to unwind. Look how long they've been shorting these bonds. Okay, this has just been printing cash for them for years now, straight. And it's time to unwind. It's going to be violent. Rates are going to drop fast. Now, banks didn't drop rates a ton today, which isn't super surprising that they would just give it all away in one day. Because remember, they're not, delivering those mortgages for like 6 months. So if it's a flash in the pan, they got to protect themselves, yada, yada. But I'm expecting if we see follow through here, you're going to see actual mortgage rates drop significantly. In fact, let's pull up rates. The reason why I have this email, this is not a mistake. I'm going to read to you one of the things I'm going to do first here to start. We'll talk about the Fed today. I got a whole bunch of stuff. The NAR verdict, what's going on with home values, interest rates, a whole bunch of stuff. I'm going to read to you the email I just sent my database. And it's a lot of things I've said before, but I succinctly want to make sure I get this message to every single human being, particularly people in the United States of America. You must know this. So here's rates today. So we got out of, so remember last time we showed rates, we had a lot of eights. Had a lot of eights on the board. Now back on the sixes, nice and easy on FHA, VA, conventional back in the low sevens, the high balance conventionals in the sevens, and the high balance arms in the low sevens. Okay. I know it's still not super sexy, but it's a lot better than it was, and it's going to get better. Jumbo fixed, 7875, the jumbo arm 7375. They're all assuming detached home, 780 credit. So if you have a condo or bad credit, rates could vary, but we always look at the same criteria. So we're comparing apples to apples on this stuff. So not too shabby. God candle in the bond market. Thank you very much. Surprising too. Very surprising. I'll tell you, there's a couple reasons why I believe today was the day. And I'm going to show you here shortly. So we got a bunch of things to go through. Let's go ahead and it's so hard to take your eyes off of that thing. Look at that guy. A couple gap fills there. I would like to see it get above this level right here. We close above that level right there, and we have that would be the true confirmation, higher high. It'd be our first higher high in so long. I mean, look at this. I guess we kind of had a higher high here, but we didn't have a closed higher high. I mean, if we get a close above this level right here, which isn't that far away now, 60 basis points away, get a close above there, and it's all over. The bears are cooked, bonds going up, rates going down. That is what I'm talking about. All right, let me move this guy back over here. I've got so many tabs open, it's insane. Okay, rates today, we went through that. Here's the email I'm going to read to you before we get into the rest of the stuff. We're also going to talk a little bit about crypto today. I'll say that for later, but about to blast off. All right, so here's what I wrote to everyone in my database today. And I want everyone to hear this. You may not have believed it when I told you this would happen, as I've emailed before. But now you've seen it for yourself, so it should all make sense. Rate increases do impact demand for housing, but not as significantly as many have predicted. These are the YouTube crash guys, Yeah, those guys. We were told 8% mortgage rates would crash the market. I told you that would not happen. The Case-Shiller Housing Index just hit its highest point ever recorded in the last data drop, and then I put the receipt right there, the link. Many people have told me that the average person can't afford a home or that home values have outpaced the median income and therefore prices must come down to accommodate everyone. Although it would be nice, this is not how markets work. I can't tell you how many people say, well, prices have to come down to accommodate median income. This is a supply and demand equation, always with any market. Supply is easy. We can see how many homes are on the market, how many builders expect to build. Both numbers are at crazy lows. Demand is mostly based on household formation. What's household formation? Okay, you and your spouse, you have 3 kids, they grow up. Now, instead of all living in one house, now there's 4 houses because each one of them goes and gets married and they live in their own house, or they stay single and they live in their own house. So now one house turned into 4. See how that works? That's household formation. This number continues to grow after shrinking wildly in the 2008 recession because people moved back. We're called the boomerang generation, where people move back in with their parents. It's been on a tear ever since then. While mortgage rates do matter, it's not enough to really move the market, but it can stall growth temporarily until rates move lower and then appreciation resumes. This is historically speaking. Never forget what I've been telling you. Eventually, only the rich will own real estate. The middle class is being ushered out. See you later. I got a sound effect for that.
Check, please. Check, please.
Middle class is being ushered out. Rich will own real estate, poor will rent. That's the future. I don't like it any more than you do, but this is Wall Street's goal, and they will keep marching forward in this direction. Do not expect the market to do you any favors or for prices to come down just so you can afford it. Won't happen. Not how it works. This is a defining moment in history. Right now. It's been going on really since COVID crash. But truthfully, it goes back to 2008. This is the plan all along. If someone tells you they believe the housing market will crash, then there's only one thing that matters. One question they need to have a very, very good answer for. Where will the inventory come from? In 2008, there were massive foreclosures that stemmed from incredible amounts of mortgage fraud and a loss mitigation systems failure at almost every major bank. At every major bank. I should have said almost every major bank. Where will the inventory come from this time? Now, if the person who's super bearish doesn't have a really good answer for this, then do not take them seriously. If they do have a good answer, please share with me because I've been looking for over a year and I can't find one. If it was out there, I'd find it. Cash buyers are in love with this market because they understand what's holding it up and what will happen when that changes, when rates go down. Smart buyers are pulling the trigger to lock in their price with the expectation that they can be able to refinance to a lower rate in the future, and this is very likely. For now, my best advice is to make sure you are in the game. If you want to upsize or downsize, nothing wrong with that at all, but stay invested in real estate. If you aren't in the game yet, do so as soon as you're able. Lastly, don't sell unless you absolutely have to. It will be mind-boggling to all of us what homes will cost in 20 to 30 years. That I promise you. And then I go on to say, always here if you need me, cheers. And we're licensed in Washington, Idaho, California, Arizona, Georgia, Florida, North Carolina, Tennessee, and Texas, in case you need help there. So I wanted to read that because I sent that out to my database today. Got a lot of people responding and just kind of telling me their experience, what's going on. People are saying, gosh, I'm so glad that we bought. I'm so glad you helped us. I'm so glad we bought a year ago, 2 years ago, 3 years ago. We're so happy that we're invested and we have our home and we have our rate and we're just so happy. And so that's always great feedback to receive, but it's important to understand what's actually happening and that your kids and your grandkids, they don't expect to be able to own homes. They're trying to train your children, your grandchildren, and their children to be renters. They want a renter mindset. That's why there's so many negative housing articles. They've been planting seeds in their little brains and buying brain cells for so long. And that's the goal. Wall Street wants to own it all. And now that's the goal. They won't be able to own it all, but they're going to continue to buy up more and more and more and more and more. And so the best thing to do is get your own home, pay it off, be prepared that your future generations may need to live there or may need to stay there. That may be the way it is. I mean, we have the housing shortage situation. Unless there's a massive decrease in population, housing shortage situation is only going to get worse, and housing is only going to get more expensive to build in these more difficult areas. All the easy and inexpensive areas to build in have already been built in. This is the Bitcoin chart that's on the right now. We could talk about something else. I could rant about that all day. It's just true. Fed holds rates steady. Hey, now, why did the bond market have such a good day? Why did we get a 136 basis point God candle in the bond market today? Well, essentially, the Federal Reserve, I interpreted what they said to be very bearish, because they were saying, hey, we're going to hold things up the way they are. But, they also said the process of getting inflation sustainably down to 2% has a long way to go. And that to me says, hey, rate cuts are far off. We're not close to cutting rates. Rate cuts are not even in the conversation right now. We've just all agreed that we're not going to raise rates any further. But they also said in the post-meeting statement that economic activity expanded at a strong pace. In the third quarter, we saw the good GDP numbers, and it looks like the economy is resilient. The employment numbers came out also stronger than expected. So the Fed has come out and said, hey, the economy looks strong. Inflation has a long way to go. This all was very bearish to me, and it could turn out to be that way. Today could have been a big, huge fake out move in the markets. Totally possible. Maybe that's why banks haven't dropped rates yet. We got to keep that as a possibility. But that's not how the tape read. The tape read bull market in everything: crypto, stocks, bonds. Buyers came back today. And maybe it's because there is an understanding that we've really baked in that things are terrible and they're going to get even worse. That's sort of baked into the cake. And if it's really not going to happen, or if that's really not true, that might bring some bulls back out. And it might cause some bears to fuck her up a little bit. Oh, cover. That could be what's going on too. But what we do know is they're nowhere near cutting. And that wasn't the reason. That wasn't the reason for the move. This had me turbo bearish this morning. Treasury details plans to step up size of bond sales to manage growing debt load and higher rates. Now, it could be the case mortgage bonds become more favorable because they're actually harder to come by. There are less and less new mortgage bonds being packaged up right now because there's less transactions taking place. So the actual supply, we were talking about earlier, supply, demand, every market, it's just about that. There's less supply of mortgage bonds, right? And right now there's a really nice yield on those things. Really nice yield. Really nice. 6-7% more. That's crazy, right? For bonds attached to mortgages that are insured and guaranteed by the government. I mean, why do you need to buy a stock or anything else with that out there? And that's why I've been so flabbergasted that these prices have gone so low. But it's Wall Street manipulation. Well, if the traditional buyers start stepping in and Wall Street sees that, or they know that it's coming, then they're going to have to get out of Dodge. And that's going to cause bonds to do exactly what they did today. In case you missed it, let me just pull it back over here. We got a God candle today. Look at this thing. 136 basis points. Hi-ya. That is what I'm talking about. Remember, I've been talking the last few days. Hey, I know I've said this before, but this really looks like the bottoming formation. Boom. So I think what might be happening here is that bond investors are going, listen, treasuries are trash. Look at how many they're having to issue to pay for this debt. Look at how much more they're going to have to issue. There's too much supply. If you own something and you know there's a huge supply of it coming to market, like let's say you have a used Tesla and you're thinking about selling or trading it in, and then you heard that they're going to be 10 million used 2 million used Teslas hitting the market, you would want to get yours on the market first, right? Or trade it in and get it out of the way. You'd want to sell it. That could be what's happening with treasuries versus mortgage bonds. So we could have a dichotomy taking place in the bond market. which would be the first time I've ever seen that. There's always a first time for everything, right? Could be it. Could be it. Oh, here's the jobs report. Payrolls rose less than expected. Still rose. So this is why you're getting sort of the positive vibe today. Oh man, I had to talk about this one. And by the way, we are live. If you want to say what's up. Oh my goodness, D. Love you too. D in the house. I think this is just someone tagging somebody. Jason Swope, what's up, man? Check it out. You're very welcome, Facebook user. When someone doesn't, I don't know if they're like not logged in or something like that. Amen. It is. All right. Yeah. So we're live here, Facebook, LinkedIn, Twitter, YouTube. You can comment. You can say what's up. I will check on all that here in just a second. Don't know what's going on with this story. Did you guys? Okay. Major landlords sued in DC for allegedly rent fixing scheme. Just that this is the only reason I brought this up is because I want you to understand it's happening in DC, most corrupt place we have in the whole country. What is up with this article? And this is exactly what they plan to do ultimately with everything everywhere. Rent will be completely controlled by major corporations. There will be no sweetheart deals. If you're renting from someone who's like a individual landlord and they're hooking you up, that's all gone. That is the future. This is the future. You're seeing it right here. That's where it's going to be. Adjustable rate mortgages demand has jumped significantly. And there's no question about it. I mean, like I was showing you earlier, for high balance conventionals, why take almost 8% when you can get closer to 7 on the 5-year ARM? You got 5 years fixed at that rate. I mean, 5 years, I think very likely opportunity is going to appear in that time to fix the rate in and get it much lower. Same thing on the jumbo side. That's a 5-year ARM right there too. You know, why take close to 8% when you can get closer to 7? I mean, it's silly. And if you believe that rates are going to go down in the future, then it's a no-brainer. If you're torn on that and you feel the need for the safety of a fixed rate, then I completely understand. A lot of people go into the ARMs. I would personally do an ARM if I was getting a loan today, and there was an ARM option. So I have been recommending that to people who feel comfortable with it. All right, here it is. This is kind of a big deal. So there's a jury that found the National Association of Realtors and some residential brokerages, including Berkshire Hathaway and others. This is in the Kansas City, Missouri federal court. Liable to pay $1.78 billion in damages for conspiring to artificially inflate commissions for home sales. Now, one thing I do want to make clear about this: the results of this, what's going to happen with this, I don't know for years. This will be appealed. There's no way they're just going to hand over to Bill. No way. I mean, it makes sense to rack up $100 million in attorney's fees. The attorneys are the only ones who win these kind of things, just to fight it, just in appeals. So they'll definitely appeal, and then that could take years. But essentially what they're saying is that the seller should not have to pay the buyer's commission, that the buyer should pay the buyer's commission, and the seller should pay the selling agent's commission. The buyer should pay the buyer's agent commission. So it's really, really silly. It's really, really silly. It's stupid, actually. I mean, if you were able to go back to all the transactions that took place, let's say so far this year, and go back to every single buyer and say, hey, what would you have done if you had to pay this extra fee? A whole bunch of people would not have bought homes. Those sellers would have been left holding the bag, or would have had to take less for their homes. I mean, there's so many, like, this hurts both sides of the equation. It's not, the way it's structured right now makes so much sense. And what they're going to try to do to this is essentially rip it to shreds. And we've seen some pretty big things happen. We've seen exits from NAR. Redfin left NAR. Big deal, right? You're going to see potentially the formation of a new association or a new collective in the real estate space, potentially headed up by one of the bigger brokerages, to combat this and to say, no, we're going to do things our way like this, and it's not illegal. What they're saying was that it was illegal, that they're liable for this for essentially coercing people. In other words, telling sellers, hey, this is how it works. You have to pay these people. Look, sellers sign a contract and there's a blank space on there. How much are you going to, pay the selling agent? How much are you going to pay the buying agent? And there's just a blank there. We're going to pay this much to these guys and this much to these guys. And they can fill it in. I think it's completely ridiculous. If you don't want to pay a buyer's agent anything, then don't. Good luck selling your house. Seriously. Ask the builders how that goes. In certain times, works out okay. When the market's so hot, maybe you'll be okay. But 95% of the time, when it's a normal market or a tough market, good luck. Good luck on that. So hopefully, when this concludes, this will be upheld, or this will be not be upheld. But it's just a silly thing that's going to be hanging over the industry for some time. Okay, we were talking earlier about just sort of like how they're forming up the youth and how they're trying to sort of appeal to them in a way that they get what they want, but really Wall Street gets what they want. 92% of young people would sacrifice other perks for a 4-day work week. I think that's something that will come. In the next 20 years, you're going to see a 4-day work week. There's no reason not to have it. All you need is overlapping shifts. Every business should be open 7 days a week and just have overlapping shifts. You have some people who work the first 4 days. You have some people who work the last 4 days of the week. Overlapping shifts, simple. It's not hard to do. Instead, we have everyone packed in the same Monday through Friday. So then you have everybody out on the weekends. And so everything gets busy. And then those places that are busy on the weekends have nobody there during the week. It's silly. Spread it out. This actually makes sense if you do it right. But this is part of the renter nation that they want to. They want to make younger people feel like they're getting what they want. Well, really, Wall Street gets what they want. So be careful for stuff like this. If you're younger out there, if you have young kids, brothers and sisters, pay attention to their mindset on this. Preach ownership of their own home to them for me, please. I thought this was kind of funny. Junan Miller, always the funniest name ever, says the government needs to stop spending like drunken sailors. Cut in time once. Yeah, we have a spending problem. So you have a spending problem, which causes what? Because the Treasury has to now step up the size of the bonds that they're selling. So they have to continue to sell more bonds, which means they have to create more debt. Okay, this is a problem. And this is a problem for, here was that link from earlier. Sorry, I forgot to mention this is the Case-Shiller index. Just hit its highest reading ever. The latest data came in August. I think it will come down a little bit from there, but we'll see as the new data comes in. But in either way, we've had higher rates for well over a year now, year and a half. And so it was last October, was like a year ago when we thought they had peaked, and then this October they hit a new peak. So we had a year of much higher rates, a year and a half of higher rates than what everyone was used to, 3s, 4s, etc. So I'm gonna include that in there. But by creating more debt, what's happening is you're devaluing everything associated. So you're devaluing the bonds, you're devaluing the dollar, a lot of things that aren't good. And that leads us to the Bitcoin conversation, which we're going to get to in just a second. Here is, okay, so that was the first. So look what we still have on the docket for this week. This is why we can't necessarily trust market action today, why I think the banks didn't necessarily trust market action today wholeheartedly. We got initial jobless claims tomorrow, okay? Productivity stuff, factory orders, and then non-farm payrolls on Friday, which is always wild and crazy, guys, okay? So we're going to kind of have to wait and see what these things look like and how the week closes. But if bonds just stay even where they are right now, if it just flat for the next 2 days, would be massive. If we can gain 50 or 60 basis points, close above the previous high, we are looking at finally having a bottom in the bond market, which means rates can go lower from here. And people have been asking me, when's the perfect time to buy? When's going to be the absolute best time to buy? The absolute best time is going to be right at the very, very moment that rates drop. Before sellers really know, before other people have kind of, had enough time to sit down at night and chat with one another and go, oh, honey, the rates are dropping. Oh, yeah, we should get involved. We should start looking at houses again. Before the whole masses become aware and apply it to their actions, there's going to be a 2-3 week window. That's the absolute best possible time, and that could be right around the corner. That could be right around the corner, because at that point you will see rates coming down, but you will know they are headed down, which means what? Prices are going to be going up. Demand is about to come to the marketplace. If you're going to purchase something, you want to purchase it prior to massive influx of demand, correct? So if we can forecast there's a massive influx of demand coming around the corner, then you're going to want to get into the market prior to that taking place. Even if rates aren't at their lowest point yet, having the confidence in knowing that they're going down, that we put a bottom into the bond market, will give you the confidence that you'll be able to refi in 6-12 months. You won't have to make very many payments at current rates, but you can get your price locked in. And that's key. And if you think inventory is low now, oh, just you wait. When the COVID surge happened, we thought inventory was low. But I remember people were buying houses left and right. Yeah, there was a lot of competition. Some people wrote offers forever. It took them a long time, to get into a home. But we had a lot more inventory then, a lot more. So now where we're at and what could happen if we get a bunch of demand to come in. I mean, if you thought inventory was low before, if you thought it was low now, wait until that comes. So it's not just about price, although that's important. It's also about having more to choose from. And it seems like right now there isn't very much to choose from. But that could most definitely get worse. Now, I'm speaking specifically about the San Diego, California market. Will things be like that in other markets across the country? I don't know. I think there's still a lot of air in some of these Midwestern markets, second home type markets, vacation type markets. I think there's still a lot of air in those that could be let out, a little bubbly, a little bubblicious. They've just gone up so much more than they ever have historically, that I feel like there still could be some room for that to get worse. But speaking of San Diego specifically, my target market, where I am, where I work, it's about to get cray. If we're right about this, remember, we don't have to be right. I'll show you this one more time. It could be wrong. This could be a total fakie. Doesn't look like it though. Look at the strong close. Big, but it was the God candle. There's no wick. It's not one of these, like you see fake candles sometimes, like, there's a big, pushes up and then it gives you this wick. Push up, wick. We saw one of these here. It looked like this was the bottom, right? That was a nice sign. And then, nope, false bottom. So a lot of times before the real bottom, there will be a nice looking false bottom. And notice the gaps here. That's also kind of makes it like, hey, they're in a hurry to take out these stops here, form the real bottom, and then take off. And that's why I've been pretty confident about this one. So 136 basis point guide candle today. Really, really optimistic about what happens next for interest rates. The next 2 days are huge, though. I mean, non-farm payrolls, this is always very volatile. Very, very volatile. You can see expectations are pretty bad here versus last time. So unemployment rate and, of course, jobless claims tomorrow. So 2 big days in the market coming up. And I think that this also could be part of the reason why money is flowing into bonds. I mean, you're getting 6, 7, 8% on some of these bonds. That's crazy. That's crazy. Secured by real estate, guaranteed by the government. That's better than a piece of paper, which would be like a T-bill. It's guaranteed by the government too, but there's nothing to secure it with. It's just good faith. I like to have the real estate behind my investment if I was going to own bonds, and maybe that is what we are finally seeing the market understand. Crazy to me that it's taking this long, but that is where it's at. Okay, let's look at Bitcoin. So crypto markets. So we're talking about the dollar being under attack, and this issuance of all these treasuries. And look at the Bitcoin chart. We call this, how long have I had this drawn out since we had this big drop? We drew the support right here, bullish order block right there, and look at it. Kaboom. Came down, Made a new bullish order block right here on September 11th of all days. And then straight up. Now, what's really interesting about this is the power through this resistance. So if you notice, we have resistance here, powered through it. Just absolutely just boom. And now, unable to reject. This is an area where we should have seen rejection based on, bearish fair value gaps over here. Not happening. Very, very little rejection. One red candle, second red candle, new bullish order block. We go higher. And it just closed. Just at 5 p.m. Just closed for the day. So we closed above all this resistance here. Very likely you're going to see moves higher here as well. Altcoins starting to move. It is about that time. We are 6 months away from the Bitcoin halving. People have been following along with this and the whole Bitcoin journey. It's very, very likely that next year will be a good year for Bitcoin. We don't know. Anything could happen, right? Could go to zero. Who knows? Not financial advice. But I'm personally invested in it and believe in it. And I remember telling you guys about GBTC, which is a Grayscale Bitcoin Trust, when it was around $11 or $12. How undervalued it was because it's not pegged properly to the net asset value of all the Bitcoin that they own. And now it's at $27. And as soon as their ETF is approved, it will immediately line up with the price of Bitcoin, which would mean it would go from 27 today to 35 because it should be 1/1000th of the price of Bitcoin. So it would immediately go from 26.90 to what's the price of Bitcoin to 35.47, just like that. And so that's something you can buy. Everyone can buy GBTC. You can buy GBTC in your brokerage account or whatever if you want to. Be careful, obviously. I'm not giving investment advice here, but people are asking about this all the time. So I do want to talk about it. Still very, very, I picked up more Tesla here recently, dipped under $200. So I scooped some. And although we did fall out, we hit this major resistance, which is this downtrend line that's been going on forever and ever and ever. From the top, the absolute top there in November of 2021, this downtrend line has just been a B. It's been tough to get through. Haven't been able to get through it. Even our nice uptrend channel has been broken. But believe you me, Tesla still has so much more upside than most people even understand. And so I am going to, when it dips like this, I'm going to be adding, even though my cost basis is much lower. The one that got away, Meta. Oh, the one that got away. Sold it all at $295. Gosh, I had such a good cost basis too. I bought it so well. Stupid idiot. But, sometimes you feel like you need to take profits, and nobody ever went broke taking a profit. So it is what it is. But yeah, I got rid of $295, and that was a mistake. So for people following me on that one, I apologize. I do. I got that one wrong. And I still think the future is bright. Remember, Meta owns 100% of the metaverse, complete monopoly. And that is going to become a big deal, especially for the next generation. The way they are trying to usher to the next generation, they want them to be renters. They want them to feel good about their jobs. They only work 4 days a week. They get all these, benefits from the government. They sort of rely on the government a little bit more. They spend a lot of time in the metaverse. That's what they want. And it's coming. Educate your children, educate your grandchildren, educate your little brothers, your little sisters. Tell them this is what they're trying to do to you. If you actually want to resist, if you don't want to be a part of that, you don't have to be. But you have to make your own way. And one of the most important things to do in regard to that is to own your own home. All right. So we're having trouble streaming to Facebook. Okay. It's fine. Whatever. Get out of here. I'm getting all kinds of notifications right now. All right. So here's what we're going to do. Is it really? Okay. It's only 5:05. All right. It's 5 o'clock somewhere. It's a margarita o'clock somewhere, which means I got to bounce. Get back some folks, make some calls, do some follow-ups. You know me. Always hustling, working hard. If you want to get a free loan quote, give me a call, should be a text or an email. Loan quote, no credit pool needed. Just tell me what your score is. Get you sorted out. Don't pay any lender fees. Get wholesale home loan rates. We dropped our comp to make rates even better. 2-1 buy downs. All programs. VA home loan specialist. Always here if you need me. You guys have a great night. I'll be back again soon.